if you want to take down a big multiple ADU play on like a 9 ADUs or something like that, you gotta have guts to do it. So although I do think it's competitive, if you don't know what you're doing, that's where you can, things can go wrong because rates can go up, right? And then how do you refinance and pay your bridge loan off or your construction loan? And then you get caught, you have to sell when you don't want to sell. So I tell people it's practical development, but you still got to be prepared and know what you're doing.
All right, guys, welcome to another episode of The Report. Today, I got one of my favorite up-and-coming real estate investors in the space. He's focused right now on developing ADUs here locally in California. I got my man, Chris Luna. Chris, welcome to the show, brother.
Man, first of all, it's a pleasure. Thank you so much for having me. I know a lot of people have sat in this chair, the Grant Cardones, these big players. So it's an honor to be here. So thank you for having me.
Of course, man. Dude, it's an honor to have you here. I met you through some of our local meetups here. Mm-hmm. You're a really cool stand-up dude, and you're looking jacked these days, man. You've been hitting that gym hard, huh?
A little bit. Fun fact, I took the last 7 days off.
Did you really?
But still, that's kind of the thing with when you work out, right? It's like anything.
Yeah.
If you put in the time, you could take a little bit of time off and you still got it.
Why are you taking 7 days off?
Well, I was on a mastermind with some buddies up north, a little bit of traveling, seeing the family, just disconnecting a little bit and just getting charged up. Now I feel ready to go. Back in town, ready to get after it.
Yeah. So I got to ask you, you always rock this C hat. Is that a Cincinnati hat?
That's a great question. Actually, my buddy owns Cuts Clothing. Got to get him on the show. Stephen Borelli and his company Cuts Clothing. They're huge, direct to consumer shirts like this. And so that stands for Cuts.
Ah, okay. I didn't know that.
Yeah, he bought it. I bought it from him. And people are like, they associate it with me now. I'll be at conferences. They'll be like, what's that stand for? I'm like, Cuts. Oh, we thought it stood for Chris.
Yeah.
So now I just rock with it. It doesn't come off my head now.
Yeah. I like it though. I like it. I'm a big fan of Cuts and then also BYLT. I wear a lot of their clothing as well. As a guy, it's like, I find one or two good shirts that fit well. And I'm like, hey, let me get 3 of those in every color.
Yep.
You know what I mean?
Yep.
But anyhow, dude, so tell us what you're doing in the real estate space today, man.
Yeah, absolutely. So I got started when I graduated from San Diego State. I knew the market really well. I saw that there was mad demand for these rental properties close to campus. Like that's where all of us wanted to live. So I graduated San Diego State. I had some buddies buying real estate in the neighborhood. And, we bought our first home and we thought we were geniuses, cash flowing a couple $1,000 a month. I was like, wow, this is cool. But 2018 came around and we start learning about the wild, wild west of ADUs. This is like a new thing at the time. And we're like, let's try and do this. Start building ADUs all around campus, buying anything that would hit the market that was walking distance to campus. So we'd buy them, get the plans and permits, build accessory dwelling units in the backyard, rent by the bedroom to college kids. And bunch of cash out refinances, built the portfolio, done over 35 transactions in that zip code, the 92115. And that's how I created most of my my portfolio and my wealth in the real estate industry.
What do you own today, overall portfolio wise?
Yeah, so as of 2022, before I sold a bunch of stuff, because I kind of saw these rates and the writing on the wall, listening to some players, I was like, okay, the portfolio value was $40 million. And I owned about 49% of it. I was going after a big deal, which we could talk about later. And that was actually one of the only deals I never closed here in San Diego. It's an $18 million property. I tried to sell a bunch of stuff, 1031 exchange into it. Interest rates went up. Couldn't raise money. It was tough. This was like September last year.
So let's go back a little bit, man, because I know your story is a little bit unique. How did you, I guess, before you got into the whole real estate thing, tell us a little bit about, how you grew up.
Yeah, absolutely. As a kid, I was always hustling. I'm buying candy bars for $1, selling it for $1.25. Buying soda cans, just anything to make money. We started a lawnmower business, me and my brother. We had no customers, but we were door knocking and just trying to make money. That was always fun to us. We had a shoe shining business, all these things as like a youngster. So I've always had the entrepreneur spirit. I've always enjoyed business and just trying to make a quarter, right? As I got older, I was a dishwasher, food runner, all these just jobs that no one wanted in college. One that stood out to me was I used to deliver pizza. So I was the delivery pizza boy. So all these jobs, but I think that was kind of what built that grit muscle in me and made me hungry to achieve more and do more. And so those were some of my early jobs and my upbringing.
What's the craziest thing you ever had someone tip you as like a pizza delivery guy?
That's a great question. I just remember the number. I remember I got $70 in one shift. I was probably like 19 years old.
One shift or one delivery?
I think it was one shift.
Okay.
I think probably for that portion of it, it was like 10 pizzas to a big company. I got like $25. I was stoked. Like that was a lot of money back then, right? Just trying to pay for my fraternity dues and, maybe some beer money. So
what fraternity were you in?
I was Sigma Alpha Epsilon.
SAE. Okay.
Yeah, SAE.
Got it. I went to Cal State San Marcos.
Okay.
I was in TEAC. At that time, at that school, there was only like SAE and TEAC. So I'm a little bit familiar.
Yeah.
So anyway, so how did you get in, like, what was the first real estate deal like? How did that even come to fruition?
Yeah, it's 2016. I had owned a cell phone repair business for 10 years total, but at this point I was in it for 4 or 5 years. I was doing well, and I'm up in Los Angeles by UCLA trying to open another location. And it didn't end up working out. Rent was too high there, but I meet up with my buddy Kevin. He's like, yo, I heard you guys are, Matt, our other buddy Matt was buying property by San Diego State. He's like, let's buy something. I was like, all right, let's do it. So he's a lawyer. I'd be like, he'd get the loan. So when I came back down to San Diego, legit maybe a couple weeks later, something hit the market by San Diego State. I was like, I'm going to buy this. So I called him. We did the numbers, and he got the loan. We split the down payment. I used a line of credit against my business to come up with some of the money for the down payment, and we bought the deal. Remodeled it, rented it out to students. Maybe we were getting $5,000 a month. Mortgage was $2,800. We were cash flowing. I was happy. I literally thought I was a genius. But it's really when the ADU plays came around a few years later that we really saw the equities and everything just explode.
What's the biggest challenge with the rent by the room model?
Rent by the room, specifically to student housing, occupancy is high. I'm like 11 months and 3 weeks out of the year we are leased. The problem is the high turnover. They either students stay 1 or 2 years, which is fine. That's on my property manager to handle, but we enjoy it. It works out well. The tenants could be a little more high maintenance, but
did they move out during the summer?
They could, but we do 11 and a half month leases, and the parents co-sign. It's joint and severable, meaning if one person doesn't pay, they're all joint and severable together.
Why not like a full 12 month? How come 11 and a half?
July 15th to about August 1, we need 2 weeks to turn over the properties, whether it's touch up paint, doorknobs, whatever, the small things that the students do tend to ruin because it's their first time living by themselves. That's probably a downside of student housing, but man, they always pay, and I always lease my units 9 to 10 months in advance, which is amazing.
Really? How do you get a lease up 10 months in advance?
We're starting leasing right now through social media for next year. The students desire our properties so much because that's one of my rules is I never compromise location. My properties are across the street from San Diego State, meaning you could roll out of bed and be on campus in minutes. And so when you don't compromise location, you can demand the highest rent, and that's what we've done. And
so ADUs come into play 2018.
Yep.
Even today, a lot of people don't realize that it's even a thing, especially people that don't live here in San Diego and invest in real estate. But it's a huge play. I guess first, before we get into that, what is an ADU?
Okay, an ADU is an accessory dwelling unit. And the easiest way I explain it to people is it could be a casita, or maybe a guest house. Maybe your parents had a guest house in the backyard your grandma lived in. It's just a detached unit in the backyard typically. And with the statewide ordinance, it allows you to build it by right. That's the key word, by right. And so no one can really stop you as long as you play within the parameters. For here in San Diego, it's 1,200 square feet, detached in the backyard, or you could do a junior ADU garage conversion. So,
yeah. And typically up to how many units can you put on a lot?
Yeah, that's the beauty of what I do on the single family game. We add 1 unit, possibly 2 sometimes. I've done up to 3 on a property by San Diego State. So I got a little quad, which just got appraised for like 3 million or 2.8, something like that. Really good.
What'd you buy that one for?
$967,000, 5505 Mary Lane.
Wow.
Yeah.
And how much work did you have to put into it, capital wise?
$700K.
Okay, so you're all in about 1.6, and it just appraised for what?
$3 million.
Wow.
It might have been 2.8. I think we got a verbal offer for $3 million.
Wow.
But the appraisal was 2.8.
And that's the true value of the ADU stuff here.
I like doing it at the beach too, because like you said, I can build a unit for a studio, $100K, And if I exited it a few blocks from the beach, maybe I'm getting 600, 625. That's a huge spread. So you do that over and over again and you build wealth.
Yeah. And so with these projects, are you typically looking to, what's your exit? Are you typically looking to refi and keep, or are you looking to sell these things for a profit?
I always told myself I'd keep everything forever, right? That was like long-term wealth. And so we start selling them. The first one we sold off, a house plus an ADU. I think it was 6441 Montezuma. We sold it 1.2. I was sad. I was like, why are we selling this? And it was the start of something crazy. The next one was 1.3, 1.4, 1.5. It kept going because multifamily guys would say, okay, I could go to North Park, pay $2 million for a property and get the same cash flow, 80K, or I can go to San Diego State, pay 1.5, 1.6, get the same cash flow. So we start exiting at 5 caps around San Diego State as rental investments to anyone, a mom and pop who wanted to buy. And we had some big exits. So start trading up into some Pacific Beach apartment deals. And that's how I got into the apartment game.
Yeah. What would you say is the biggest challenge or some of the biggest challenges around getting into an ADU play?
Biggest challenge, timing of it is important because we get in the game to make cash flow and build wealth, but the truth is you may break even for the first 8 months if the city's taking forever with plans. On that same deal I just told you about, it took 9 months to get those stamp plans. That's a long time. When we were getting started, I could get stamp plans in 3 months, much better. So, 3 times longer to get plans. If you don't have tenants in there, then you could be bleeding. But we just factor that into our total cost. On some of these deals, I'm looking for that equity multiple and building the equity and then cash flow when it's stabilized. So that would be a challenge for sure. Another one in the student housing game is you need to be ready. Your units need to be built by August or July or winter semester, so January or February. So if you miss that timeline, you kind of get caught with renters who are paying half off or something like that.
Yeah. So what would you do in that case if you missed that August move-in and let's say you rolled it out in October?
Yep.
What would be the ideal play there? Because you don't necessarily want to put a 12-month tenant in there. So what do you do?
Yeah. First of all, if we've ever missed any of those deadlines, I've had to put students in hotels for a little bit, for a few weeks until they're done. This could be because the contractor was behind or the city took forever with plans and permits. So that is a thing. What I would do in this situation is potentially Airbnb it for a little bit to people coming to San Diego State. You can get some city or community college students who want to just rent for a few months also, or foreign exchange students is a nice little play also that you can sometimes get.
Foreign exchange students, I haven't heard of that. What? How do you market to foreign exchange students?
Yeah, so I have a guy and he has a Facebook page and that's just his whole business. Mm-hmm. So he'll post there, he'll say, hey, you got a property on College Avenue, this is the rent. And he essentially acts as a middleman. He'll rent it from me. It's like arbitrage. He'll rent it from me for a smaller amount because it's like a weird time, $3,200, and then he'll go and lease it out and make the spread. And then he acts as the property manager.
And so do you use third-party management for all your stuff?
We used to. We had when it was me and a few other business partners, we used to, but now we've brought it in-house for the properties I own.
Okay.
Yeah.
Gotcha. And so do you Airbnb any of your properties?
If you are a busy professional and don't have time to invest in real estate but still want to participate in the passive income and tax benefits, my team, Summers Capital, is buying a lot of boutique hotels right now. We source the deals, we renovate the properties, and we even do all the day-to-day management, making it truly hands-off for our investors. If you want to learn more to see if we can help you, go to summerscapital.com/invest to book a call with our team. Again, that's summerscapital.com/invest. Now back to the show.
I don't, but I'm starting to look into it for some of the deals I have by Pacific Beach. I went into the deals thinking, love the location, right? I'm going to do some ADU plays there. And what I realized is I'm making cash flow. I'm good, but I can maximize it by doing this whole Airbnb game. So definitely starting to look into that as well.
Yeah. I mean, I always say, hey, there's, an opportunity, at least in San Diego, where we manage and operate short-term rentals, boutique hotels in 10 markets around the country. San Diego is one of them, and San Diego by far is like the best market that we're in. We don't have to push on these listings to keep them full. Mm-hmm. From a seasonality and like a weather perspective, we get great year-round weather here. I would say the slowest months are typically January, February. Those are most markets, except for your like mountain towns. But even January, February, like you're still cranking pretty good, and you're still keeping the occupancy high. And then now with all the short-term rental regulations that came down the pipeline in May of this year, it's like, okay, well, now you're slashing the supply and you're going to keep it limited. I'm very bullish on the short-term rental space here in San Diego, and the city still has licenses left.
Heard about that.
Yeah,
I might have to go swoop a few before.
You should. I mean, all the listeners should too. It's an opportunity that's not going to be around forever. Once they hit their cap, then they're not going to be issuing anymore. So I know I personally just picked up another deal here a couple weeks back here in Lida, Italy. It was like a single-family historic building, 3-bed, and the play is going to renovate the main house and then going to build a 2-bedroom, 1-bath ADU in the back. It's going to take 12 to 24 months to get that permit. I bought it with a buddy. We partnered on it, and the seller carried like pretty much the whole down payment, which is kind of cool.
That's nice.
And then we got like a hard money loan. They're going to finance 85% of all the renovation
Construction.
costs.
Nice.
So excited for that, and then we'll short-term rental both sides out. But dude, I see it as a play here, and I'm bullish on it, and that's why I want to buy more hotels here in San Diego, just because I know when they limit the supply of short-term rentals, it brings more demand to the hotels.
Yeah, I love that. You're mixing like a little bit of everything. What I heard there was creative finance to get the deal, basically, which is amazing. And then you have your niche of the boutique hotel, and then you're maximizing the Airbnb and the types of rents you can get, plus the ADU. So you're like mixing everything together. I love that. It's amazing.
Yeah, a little bit of everything. And so I don't know. We'll see where this San Diego kind of real estate market goes, but I've always been bullish on it. From a supply standpoint, you're surrounded by, they say San Diego's kind of on an island because to the north, you got Camp Pendleton. To the west, you got the Pacific Ocean.
Yep.
To the south, you got the Mexican border. And then to the east, you got mountain ranges, right? Yep. And so they say it's kind of an island. There's not a lot of land to build on. And so I think, as more and more people around the country move out here and migrate here, it's only going to push pricing up.
Yep.
Dude, there's so many people that move to San Diego. Maybe they leave for a little bit and they always end up coming back. They're like, fuck, I didn't realize how beautiful it is there, Yeah. And then also I would say, like, out of all the major markets in California, you got the Bay Area, you got Los Angeles, Orange County, San Diego. San Diego by far is the cheapest cost of living. You could argue it has the best beaches, it has the best climate out of the four. So I think it's just a matter of time before more and more people move down this way.
I love it. And it's, a lot of people hate on investing in San Diego and all these types of things, but I like that you are very vocal about the upside of San Diego because it helps. Investors should be investing here. If they have good operators like you, like me, like they should be placing money here because values are only going to rise.
Yeah, I agree, man. And you know what? It's funny because like all the people that say, I'll never invest in Southern California, those people have never invested in Southern California. So, I'm like, hey, more people that say that, I'm great. Keep them out of here. Right? It's less competition for us.
That's true. That's true.
But I always thought it was funny. The people that say, I don't invest there, they've never invested here.
Yeah. I say check back in 5 to 10 years and we'll see.
Well, and you could tell me if this is true. I don't know. But I believe San Diego is like one of the only markets in the entire country to where you can buy a single family home, and depending on the square footage of the lot and the setbacks, you could potentially build. I mean, I was looking at a deal. I was walking a deal last weekend, a single family here in Mission Hills that was like on like a 2-acre lot, and it was zoned for like 45 units.
Yeah. So there's some stuff in North Park and Normal Heights, the 92104, where if you're on a multifamily lot, but it's like a single family home, you can build ridiculous amounts. I was looking at this deal. I believe it was a triplex, single family home in the front, duplex in the back, big lot of land in the middle, open canvas. That's what I love. I love that and corner lots. And so we could build 9 ADUs there, 9 studios, maybe 9 one-bedrooms, 3 stories high. And the equity you would build on a deal like that would be around $2 million. It's a 24-month play, takes a long time. That's the downside. But I feel like that's real estate investing. Like you're developing the land, you're solving a problem with the housing crisis, and some of those units will be affordable. But all in all, it's amazing.
Yeah, I agree. Do you think this ADU opportunity will be around forever? Or do you think they'll put a stop to it eventually?
What's interesting is 2018, I think it started in 2018, maybe sooner, but I heard about it in 2018. So that's 5 years. And, it's starting to become more of a thing in San Diego, but I was looking into Cincinnati. It's funny you asked about
Yeah.
the hat. And they just passed ADUs there 2 months ago in July. We just gave away the secret, but now everyone's going to know, but that's okay.
Well, here's the thing though, with Cincinnati, it's still relatively about the same cost to build, maybe a little bit cheaper, but the comps in that area are not going to comp out at $600-700 a square foot. And so, this model only makes sense in expensive markets. Maybe not, I'm not going to say only, but it makes a lot more sense in expensive markets. Does that make sense?
Absolutely. Austin, Miami, these dense areas, right? Phoenix, Scottsdale. What I was thinking about Cincinnati, because I had that same thought. I was like, man, I'm going to go and build this. I think they only allow like 800 to 900 square feet. So it's not even that big of a unit. It's like a 2-bed or a 3-bed. But what I thought is, okay, maybe where it makes sense is what I keep telling people in Airbnb markets where you can really maximize the rents, or student housing. I wouldn't go buy just a single family home, spend all this money and time to build a 2-bed, 1-bath and rent it out for $1,800. Like I could just go get 1 bedroom at San Diego State and it produced the same amount of rent. So Airbnb, student housing, I think it could work in these different markets that aren't as dense.
Okay, I see what you're saying. So you're saying that you're saying you could go do it in Cincinnati if you're gonna be able to rent it for a specific income that makes sense from a cash flow perspective.
Yeah.
Okay. That makes sense. And there are some areas of Cincinnati, I think, I have two multifamily deals out there that were like two of my early deals early on. And there are some expensive neighborhoods within Cincinnati, and the rents keep going up out there. It's a lot. The rents are probably almost double what they were when I first got in there. And there are some areas of Cincinnati. So like, what's it called? Kind of downtown area over the Rhine is the area. They call it OTR. And that area of Cincinnati is relatively expensive. Like you're looking at, if you buy a multifamily deal out there, I mean, it could be $300,000 a unit,
Wow.
which is almost San Diego numbers. Or
Yeah.
if,
I was looking at a 5-unit out there and it was like $200K a unit for a 5-unit right by a Lululemon, like great location. It's probably close to there. It's cool to look at different markets and start to scale and realize with San Diego State, I was so concerned with just like my zip code, and that's cool to dominate there for 5-6 years. But it's really cool to have students in these different markets and start looking and learning other markets to expand.
Absolutely. So tell me about Backyard Billionaire. This is a recent thing that you're doing. Tell me about what you're doing there.
Yeah, absolutely. So Backyard Billionaire started with an idea to, I was fortunate enough to have good friends and good buddies who taught me the real estate game. And, I was so thankful, but then I thought to myself, man, I want to pay it forward. But I don't want to just teach one person. With Zoom and all the technology and everything we have available to us, I was like, let's teach everybody. So, Ryan Pineda has been great at, a buddy of ours helping me scale and learning how to coach and all these different things using social media. So I said, let's go teach people across the nation how to build ADUs. And it's not going to be in every city, kind of like we just discussed about, but I do plan to build the biggest ADU community across the United States. And that's by offering group mentorships like we do. We meet twice a week on Zoom, and one-on-one mentorships. Those are typically students I'm going to partner with on deals. And then we have a course. So a little bit of everything. I use social media to draw attention, show track record, and really essentially building community.
Yeah. I think that's the way to do it these days. If you look at all the big players in the space that are growing their brands, a lot of them all have a community. Like Ryan's got the Wealthy Way. Brandon Turner's got some community now. Pace has got the Subject too. But I think that's the way to do it. And I love that you're attacking the ADU stuff because it is kind of blue ocean. No one's really putting out a lot of content on it. Do you feel like the space is competitive right now?
It's a good question.
And when I say that, I mean here specifically in San Diego.
Yeah, I think we're getting to the point where there's a lot of people see the success of it, and so more people are getting into it. But you got to have some guts to buy a home in San Diego at the prices we pay, and then to have the holding cost, let alone on a single family home deal, much smaller. But if you want to take down a big multiple ADU play on like a 9 ADUs or something like that, you got to like You got to have guts to do it. So although I do think it's competitive, if you don't know what you're doing, that's where you can, things can go wrong because rates can go up, right? And then how do you refinance and pay your bridge loan off or your construction loan? And then you get caught, you have to sell when you don't want to sell. So I tell people it's practical development, but you still got to be prepared and know what you're doing. So yeah, it's competitive, but it's definitely doable.
Yeah. Andrew Greer has been on this podcast before, and I know he's doing a lot of ADU projects. My two old partners, Sean and Mike, that I used to buy multifamily with, they're buying ADU stuff right now, and they're kind of going all in on the ADU play currently. And then I always see folks that come out to our meetup, they're doing it to a certain extent as well. I think it's definitely compelling, and it makes investing in today's climate something that is achievable, because I always say right now in this high interest rate environment, pricing is softening in a lot of markets, a lot of different asset classes. It's hard to argue that. We don't know when the Fed is going to, what they're going to do with the rates. But for me to buy right now, I always say, hey, I need two things. One, I need to be able to buy at a discount. And two, I need to be able to add tremendous value. And the reason I say that is because back in 2015, 17, 18, you could buy the turnkey stuff. And, even if you're breaking even with the income that's coming in, the rent, you're being able to pay all your expenses and you're breaking even, you're not making any cash flow. At least you could ride that natural appreciation, right?
Yep.
And you still build equity, you still build appreciation. But in today's climate with the softening pricing, well, it's like you buy the turnkey stuff right now, you're going to be underwater a year from now, 6 months from now, 18 months from now. And so I always say, hey, I need to be able to buy at a discount, but two, add tremendous value. And I think with the ADU play right here, you're able to basically solve that second part of the equation, and you can add tremendous value. You can, like you said, you bought that property for 1.3 or whatever, 900, and put 700 in. You're all at 1.6, and it appraised for how much? 2.8. Yeah, and so that's an example of, hey, being able to add tremendous value. So I think it solves that part of the equation.
Yeah, absolutely. That's spot on. And also at the core of it, we are solving a housing crisis, right? We're providing more opportunities for people to rent. Some of my units are affordable. On that deal we just talked about, the one that appraised for 2.8, one of the units is affordable. So we're also helping people in that sense who can't maybe afford a typical home, afford something that works for them in a good neighborhood they want to be in. So it checks all the boxes, and going to keep at it. Yeah.
Location wise, like, what should one be looking for in terms of what are some things they want to look for when buying an ADU project? Maybe not so much for location, but maybe in terms of the lot and the neighborhood, that sort of thing.
Yeah. So I like, for me, what's worked for me, 6,000 square foot lots are great or bigger. Location wise, is it close to a Starbucks, a Whole Foods, these types of things? I really want to get excited about the property. Like if I'm pulling up to the property at night and there's no lights and it's dark and it's just not a good location, I like to drive the properties at all times of the day and just get a vibe for the community. So I'm always looking for that. Like, what's the general feeling of the property is super important to me. One thing I'll always be looking for is it on a corner lot? If it's on a corner lot, you can have a property here and then on here. And then in that case, you have two different access points. So that's a nice little tip. Another tip would be, does it have alleyway access? Today, me and one of my students were looking at a deal he's going after through Creative Finance in Dallas, $100,000 property, but it's on an alleyway on a big rectangular lot. So you could build the ADU on the backside of it, put a fence in the middle, and now you have two access points. So these types of little things you learn over the years. You learn to stay away from SDG&E power lines because that can cause projects to be delayed if you're too close to the high or low voltage. All these little tips you pick up and you learn as you go.
What determines, like out here in San Diego, what determines how many units you can build on that lot?
Typically, it's the floor area ratio.
What is that?
So floor area ratio would be whatever the existing lot size is, there's a multiplier effect on whatever size the lot is, and that determines how many units you can build. So sometimes you'll see floor area ratio of 1.7 or 6. I don't know too much about that stuff. I hand it out, and this is what I tell my students too. It's, you do want to know this stuff, but really you want to find the architect who knows that. And you put it on them to say, hey, what can I build here? And from there, I'll go and look at my options, run my numbers, run the rental comps, and then identify if it's cash flow or not.
Do you like to go to like a third-party independent architect, or do you like to use some of these companies like ADU Geeks that kind of do it all for you?
I've used them once. I'm currently using them, and no problem with them. They communicate very well. In my early days by San Diego State, I used one person who was really good at what she did, and I still use her for multiple deals. And it's just when you have one person like that, that's her job. She's working for a paycheck. She just gets the job done. So that's been very good for us. I think I'll continue to use her because it's just quick, it's streamlined. She knows what I'm looking for.
Okay.
That's what I tell my students too. You want to be on a text basis with your architect. Like, hey, what can I build here? I ask her, she goes and looks it up. She's like, you could probably do this. I'm like, great. Then I go into my calculator and I run the cash flow analysis.
Yeah. I've had one architect that was the slowest architect I've ever, that probably exists. It took, I want to say more than about 24 months to get permits on a ADU in a property I have here in San Diego.
Wow.
And right now it's like the busy season. We operate this property as a short-term rental. So I'm like, let's wait till January, and then we'll do that build out January, February where it's slow. But finally got the permit. How long are those permits good for? Is it about 12 months?
Good question. For me, I'm always like, get the permits, start. So
Yeah.
I've never like had to wait. I could see it taking, expiring within about a year. Sounds about right.
Sounds about right.
Yeah.
And then now with this latest project, we're going to use ADU Geeks and just kind of streamline it. So excited to kind of compare both, but I'm sure that it's not hard to beat the last guy that I had.
Yeah, that's good. Yeah, always looking for good architects. In my program, that's what we tell people. Identify an architect like right away.
How do you find the best architect?
Good question. What I just told my student up in Santa Barbara, I said he knew someone at the county. I said, go and talk to them and ask the county guy, your friend, which architects are coming in and presenting ADU plans and who's getting stuff stamped. And then from there, reach out to them, cold email, cold call. They're looking for your business. They want to earn your business and say, show us what you've done, and then go and drive those projects and see what's been built.
Yeah, I think that's a good idea there. Finding the right contractor is big too. Mm-hmm. So with the ADUs, can most contractors build the ADUs as well?
Yeah. I have multiple contractors who built these. If you drive around San Diego State, you're going to see the same big old rectangular box for them. They're charging, I've paid, when we started, maybe $200K to build these, 1,200 square feet. Now it's up to $225, $235, depending on if you're doing solar and landscape. And another thing is when you're building a unit in the backyard, sometimes people forget about the plumbing. You got to connect it. It's a lot of digging, and it's got to drop 1/4 inch along the way. So just having contractors bid it out. I tell my students, get 3 bids and do it early on. Like once you submit to the city and you know what more or less you're going to build, start working with your contractors to identify, because the last thing you want to do is you're ready to build, you're excited, you're trying to hit your timeline, and then you just sign a bid so you can start, right? Whereas if you planned ahead, you're going to get the best bid, the best price, and you're not going to be rushed and forced into a bid that you didn't want to sign. Yeah,
that makes sense. In regards to lending, how are you financing a lot of these ADU projects? Because I know, on the purchase, it's one type of financing, and let's say depending on how long the permits take, in my case, that one took 24 months, right? Mm-hmm. And so what is the best way to finance an ADU build out once you finally get the permits?
Yeah, early on when we were getting great traditional Fannie and Freddie debt, 4.5%, 4.25%, even 5% back then didn't seem like a big deal. We'd put 20, 25% down, and what we'd do is the mortgage would be much lower, mm-hmm. right? And we would just go get a second trust deed on the property for $200K, get that wire from a hard money lender, 9% interest, build it out in 3 to 4 months, refinance out of it, cash out, pay him back, and put the new permanent debt on it.
Yeah, that's I think that's always the way to go if you can get that. I know with my Linda Vista property up there, I did do the same kind of thing, mm-hmm. And then going to use that money to do the build out. Would you say most of these lenders, at least in the good, when the conditions were good, they would finance 100% of the build out?
Yeah, they would, because they would. How my hard money lender Luke would see it is, if I defaulted on the loan, he just gets a really cool property with plans and permits and something half built or something like that. So in that case, yes, I would see people finance 100% of it. We typically pay for the plans and permits anywhere from $25,000 to $30,000 out of pocket, and that's kind of cool because you do it over time. It's like architect fees $3,000, survey, plan check fees, developer fees, school fees. And this is over a span of 4 or 5 months. And we just fund that out of pocket from the cash flow of the property if it's making any money.
Yeah, absolutely. You do some, you're in Robert Martinez's mastermind as well as a few other. I know Ryan's, you're in Ryan's. I was actually just talking with Robert earlier today.
Oh, nice.
Trying to get him on the podcast.
He's got it.
You know, he had that article drop a few days ago.
Saw that.
Foreclosing on like a $54 million deal, floating rate. So I'm curious, like what is going on there? Do you know the backstory there?
I don't know the backstory. I do know he's been very, very, transparent with his investors on whatever's going on there. Floating rate debt. It's not just him, it's everywhere. And Grant warned us because I'm in Grant's real estate club also. And he's warned us about this for over a year now. Tides Equities, a lot of these people who got the floating rate debt, it's just the rents haven't kept up with where the debt is. And I know he just like the article said, he went to them hat in hand to try and figure it out. And I think the lenders maybe being a little predatory and trying to take the property. But I believe in Robert. I believe he'll find a way out of this, whether that means selling off another property, recapitalizing. I think he'll figure out how to get that loan paid back. That's my guess. I don't know what's going to happen though. I'm staying tuned just like the rest of us.
I know. I saw the article drop. I'm like, dude, I got to get him on the show and talk about it. Because like you said, like I think in the lending environment right now, a lot of apartment investors got into the floating rate debt, especially in 21 and even early 22 before the rates went up. And no one anticipated the rates going up this high. And so then it's like, okay, you either work out a deal with your lender. Are you going to have to do a refinance into some permanent debt?
Yeah.
We had a couple deals that we bought in North Carolina that we had floating rate debt on. Luckily, we added enough value and we increased the NOI enough to where we could refinance into perm debt. One deal, it was just rate and term, but we didn't have to bring any cash to the table. And then the other one, we were actually able to do a cash out and refinance into some perm debt. But a lot of other deals, people are going to have to bring cash to the table to refinance into the perm debt. Or work out a deal with the lender. And if not, that's a tough situation, right?
I was in the same situation. I had a 5-unit in Pacific Beach, great deal, 3 blocks from the beach. And I had to, you call it capital call, right? Cash call. But luckily, I was well capitalized enough that I just funded it. And so I didn't go to my investors and say, hey, cash call. I just funded whatever it was. We were able to refinance. And if we ever sell someday, I'll get that money back and I'll capitalize it. I think that's what good operators do. Of course, I could have, from a standpoint of what our agreement said, we should have all came in with that money. And so if you're able to stroke the check, I think Grant Cardone, same thing. Sometimes you got to stroke the check for your investors and you'll get that money back someday. But that's what good operators do, in my opinion.
Yeah. A lot of people hate on Grant, but I'm like, because he has so many other businesses and streams of income, it's like when he gets in a position like this, hey, maybe he doesn't have to go do a capital call. He can just fund it with his own stuff.
He's the bank.
Which is cool.
He's his own bank. And that's inspiration for us. That's why I was like, okay, I should take this coaching thing more serious and I should take this social media serious. Like you were talking about it earlier, just getting attention. It's crazy. I'll hop on calls with people and it'll be like to see if they want to be part of our community. And then it's like, I got 400K, but I really don't want to be a student. Like, can I just invest with you? So now I'm like raising money because of social media.
Yeah. Dude, social media is such a big thing, man.
It's crazy.
So I want to hear this story though, about, you said you did a 1031 into a deal.
Yep.
And it was a larger deal and you weren't able to complete the raise.
Yeah.
Tell me about that.
Yeah. So this deal changed my life. I had been doing really well up until this point. I had just closed 10 million in apartment deals July 2022. I thought I was like on top of the world. I finally broke into the apartment game. Side note, this whole time I thought I wanted multifamily and I was going to lean into it. Everyone's doing it. It wasn't until I realized in showcasing like the whole ADU thing that I was like, I need to lean into this ADU thing. And you gave me that idea because it's blue ocean, but that's a side note. Anyways, multifamily deal, $18 million, 39 unit hits in PB. There's big players going after this. These guys have billions assets under management. Big guys locally here in San Diego. 10 offers. I somehow get the deal. I get awarded the deal. Used my know-how, and I got the deal. And so it was a longer escrow, and I started selling off some properties to 1031 exchange into it. The raise was about $5 million, and I didn't end up closing the deal because two things. Interest rates went up 3 times during September, October, and November. Investors were scared to put money into this deal, and I just didn't close. Had to forfeit an EMD, $500K EMD.
You had to forfeit it?
Had to forfeit it, but I'm sitting at a mastermind. So this is November. November 15th was just like the worst day ever for me. And this is before social media and everything. I said, I'm not going to let this happen to someone else. I'm going to start doing social media. So that was the inflection point in my life where I was like, I thought I was untouchable. I thought I was the man. And then boom, I just got served. So I was really bummed, started using social media, talking about it a little bit, helped me kind of vent, not vent, but just get it out and let go of it. So then January comes around, I'm at Robert Martinez's mastermind, and he says one thing. And I was like, oh, I should try that. I call the seller. I leave the room. We're in Houston. I leave the room. I call him. I go, hey, going through a tough time. Like, is there any way you give me half of the deposit back? He was like, if you sign this paperwork and you promise not to do this and you just let it go, like, we'll be good. They gave me half of it back.
Wow.
I could stomach losing $250,000.
Yeah.
I can't stomach losing $500,000. That was rough. That was my money, not my investors. That was my cash.
And this was after the deal was pretty much done. You already forfeited the money, or this is like kind of while it was unraveling?
Yeah, it was done. I already talked to multiple lawyers, big shot lawyers. They're like, you're not getting that money back. It's because their lawyer had me sign something. And, I'm really fortunate that they saw where I was coming from. I came to them hat in hand. I was like, man, this put me in a tough spot. And you can't ever connect the dots looking forward, but looking back on it, like everything happens for a reason. That put me into the social media game, which I know is changing the entire trajectory of everything I'm doing. So thankful it happened. I don't want that to happen to anyone else.
Yeah.
Now I'm here.
I'm
sitting with you.
Yeah. Then that's a lesson for the taking.
Yeah.
Well, dude, I appreciate you coming on, man. I'm a big fan of, everything you're doing here locally. And I love that you're going after the ADU stuff and growing the brand and leaning into it. Like I said, it's blue ocean. And I'm stoked to see where you go next, man.
Awesome, man. Again, thank you for having me. Super blessed to be here and keep putting San Diego, the investment scene on the map. It's super inspirational, and let's keep crushing it.
I appreciate you, man. Listeners, thanks for tuning in. We'll see you in the next one. Peace.